All right, let's dive right into this explainer. Today, we're breaking down the incredibly sophisticated mechanics of a modern cyber stock fraud that literally cost one man millions. We're looking at a fascinating and honestly terrifying case out of Panchkula, where a local resident's everyday ambition to invest turned into an absolute financial nightmare. We're going to completely unpack exactly how this Sortik-based syndicate operated, step by step. We'll explore the dark psychology they used, the digital infrastructure they built, and finally, how the cybercrime police actually managed to track them down. Let's get right into it.
Just take a second and imagine losing 49.31 lakh rupees. That is just a staggering amount of money. And here's the wildest part. It didn't happen through some shadowy back alley deal or a massively compromised corporate bank account. Nope. It all started from a simple, innocent scroll on a smartphone. You know, we so often think of cyber fraud as a guy in a hoodie hacking through complex firewalls. But as we'll see in this explainer, the modern hacker hacks human psychology first. Section 1. The social media hook, from scrolling to targeted attack. Let's see how they actually initiated this back in January 2026.
It's honestly chilling how efficient this social engineering pipeline is. Look at step 1. The victim sees an Instagram reel, and it's offering exactly what every single investor wants, right? High returns and a magical way to recover past stock market losses. Then, step 2, he clicks a WhatsApp link embedded right there in the video. And guys, this is absolutely crucial. This is the transition from a very public platform into a private, controlled space. By step 3, he's added to multiple WhatsApp groups. The sheer genius of this tactic is that it effortlessly pulls a victim into an isolated echo chamber. Suddenly, he's surrounded by these supposed brilliant investment experts, all reinforcing the exact same narrative and completely drowning out any critical outside voices.
Moving on to Section 2, the fake app illusion. The mechanics of building trust, because once the victim is isolated, they have to make him believe the lie.
Look at that first point. They didn't just claim to be random successful traders, they actively posed as official representatives of Kodak Securities. Borrowing the credibility of a massive established brand is such a classic maneuver. Next, they persuade him to open what they called a primary trading account and guided him to invest in these exclusive special shares. But here is the absolute masterstroke, that fourth point. They literally credited 7,000 rupees directly to the victim's bank account as a profit. By paying out early, fake profits, they completely short-circuited his natural skepticism. I mean, think about it. Why would a scammer send you money, right? That 7,000 rupee investment bought them his absolute, unquestioning trust.
And so, the whole trap relies on this intense, manufactured contrast. While the victim was systematically wiring out over 49 lakh rupees of real money between February and April 2026, the fake trading app kept him totally hooked. How? By displaying a ballooning, entirely fictional balance of over 1.17 crore rupees. Every single time he opened that app, his brain got a massive dopamine hit, which completely masked the devastating reality that he was throwing his actual life savings right into a black hole.
Which brings us to Section 3, the withdrawal trap. The psychological pressure applied. Because obviously, an illusion can only last until reality comes knocking.
So the victim tries to withdraw his fortune, and instead of a payout, the trap snaps shut. The fraudsters audaciously demanded an additional 13.65 lakh rupees. And their justification for this? They claim this massive fee was totally necessary for service charges, brokerage, and taxes before his 1.17 crore could be released. It's a classic advance fee fraud mechanism, totally leveraging the sunk cost fallacy. The victim is so close to the finish line, so incredibly desperate to get his hands on those perceived millions, that the scammers are betting he'll pay up just one more time.
Fortunately, this massive fee request is what finally triggers a giant red flag. The victim stops interacting through the screen and actually visits a physical, real-world Kodak Securities office. And just like that, the devastating illusion is completely shattered. They tell him no such trading account exists, he owns no special shares, and that app installed on his phone, a complete fabrication. This huge reality check prompts him to immediately jump on the National Cybercrime Portal and lodge a formal complaint.
Section 4. Tracing the syndicate, the investigation and bust. Let's dig into the technical investigation launched by ACP Crime Arvind Kamboj and SHO Yudhvir of the Panchkula Cybercrime Police Station.
So they started following the digital breadcrumbs. By pulling data from WhatsApp, Google, and SEBI, authorities traced a massive digital footprint. Now look closely at that first date on the timeline, 2021.
The investigation astonishingly revealed that the fake application and the related Google IDs were created by the suspects during their B-Tech studies literally 5 years prior to this specific fraud. This wasn't some spur-of-the-moment crime. The digital infrastructure was laid down years in advance. From there, the timeline moves incredibly fast. The hook happens in January 2026, the huge transfers happen through April, the case gets registered on April 30th under the Bhartiya Nyaya Sanhita, and boom, arrests are made on May 10th.
And the real-world consequence of all that meticulous digital tracking was the unmasking of two specific individuals. The police traced the IPs and the accounts directly to Surat, Gujarat. They identified and arrested Jamin Hans McBhai Thuma and Darshak Prakash Bhai Gujera. Following the bust, a local court granted a 7-day police remand to let investigators really dig deep into their operations.
Which leads us to Section 5, a wider fraud network, the search for accomplices. Because a bust like this rarely ever ends with just the app developers.
That 7-day police remand was absolutely critical. Police report that interrogations have already yielded some huge disclosures. Authorities are aggressively investigating whether the syndicate used a much wider network of fake IDs and burner mobile numbers to execute similar multi-million rupee frauds all over the country. They're actively hunting down the accomplices, the people who likely managed the slick Instagram marketing, ran those fake WhatsApp groups, and operated the complex network of bank accounts used to funnel that stolen 49 lakh rupees.
Ultimately, this explainer highlights just how sophisticated, patient, and deeply psychologically manipulative modern cyber fraud has become. They don't just steal your money anymore. They build an entire alternate reality right there on your phone, complete with fake profits, fake apps, and fake customer service. So, the next time you're scrolling through financial advice on social media, keep this punchy color case in the back of your mind. When you click that link, who is really on the other side of that screen? Thanks so much for joining me for this explainer. Stay vigilant out there, and I'll see you in the next one.